రోజు ట్యాక్స్ కట్టేసాం సార్.
చేస్తా
రోజు ట్యాక్స్ కట్టేసాం. గవర్నమెంట్స్ రేపు
ఇప్పుడు ఏం కావాలి?
టాలీ
82,000
అది
టాలీ అవస్థ
ఎల్ఐసి కమిషన్ 16,000 సార్ వచ్చింది.
Good evening, everyone. Please, sir, please mute yourself. I welcome all the delegates to this Budget 2022 CPE seminar of the Ongole branch of SIRSF ICI. Today we are going to have two big speakers. One is Sri Gopala, Raju, another one is Sri R.Subramaniyan. Now we will stand for the ICI motto song.
येष सुप्तेषु जागृति येष सुप्तेषु जागृति
డిస్కనెక్ట్ అయింది.
కనెక్ట్ అయిందా?
రావట్లేదు, సాంగ్ రావట్లేదు.
ఓకే ఓకే,
నాకు కనెక్ట్ అయింది, కనెక్ట్ అయ్యి అయిపోయింది.
కనెక్ట్ అయ్యి ఆగిందా? ఓకే, 1 minute.
ఇది స్టాంప్ డ్యూటీ, దీన్ని ఏం చేయలేము. ఒకవేళ నువ్వు చేయాలనుకున్నా ఇదేం చేయలేము. 10:40 కొంచెం కొంచెం జనాలు కొట్టారు, వాడు బ్యాలెన్స్ ట్రాన్స్ఫర్ చేస్తాం.
వస్తుందా?
వస్తుంది వస్తుంది.
येष सुप्तेषु जागृति येष सुप्तेषु जागृति कामं 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 कामंशो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तदेव शुक्रब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यधिकश्चन एतद्वैता 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 एतद्वैता.
Now I request the Ongole branch chairman Sri K. Rajendra Prasad Garu to give his welcome speech.
Good evening all of you. Today's first technical session speaker CA Dr. Gopala Krishna Raju Garu. Second technical section speaker Sri R.Subramaniyan Garu. Senior members of the profession, past chairmen of Ongole branch, and my dear professional colleagues. We welcome you all for the today's CPE seminar on Finance Bill 2022 Direct and Indirect Tax Proposals. Every year we used to have budget meeting. For the current year 2022, this is the first meeting organized by our Ongole branch. The faculties are highly rated faculties. Already gave several physical and online seminars for Ongole branch as well as across India. In the present days, finance ministers are not giving much emphasis for the proposals of the income tax in their budget speech. I hope there are several amendments. There are several amendments in direct and indirect taxes which are required, which are to be updated by us. These amendments are also very welcome move. Recently, our Ongole branch elections are over. This time also, the entire MC was elected unanimously. I congratulate Kalluri Ranganayakulu Garu, NB Chaitanya Reddy Garu, who are continuing in the coming MC, and new members Perkam Srimannarayan Garu from Chirala, Duddu Saujanya from Ongolu, Konujeti Krishna Kishore from Ongolu, Chundur Prem Kumar, Ongolu. I also thank all the members who have withdrawn their nominations for the unanimous elections. I thank speakers, both the speakers, for accepting our invitation, and over to moderator. Thank you. Mute lo unnaru meer.
Now I request Sri C.A. Shankar Narendra Kumar Garu to introduce our today's speaker, Sri Gopala Krishna Garu.
Sir. Hello. Thank you, Ongole branch, for giving me this opportunity. It is such a long biodata. I am very happy to read all this biodata in a brief. Sir has got qualified in many subjects, but even we have not studied, and I will briefly read about all those things. Sir is practicing chartered and hailed from a chartered accountant family. His father, mother, brother, wife, all are chartered accountants. Sir has total Sir firm has 6 branches. Sir has been awarded directorate from Australia and Melbourne, Mother Teresa University, in governing of GST in government sector. Sir has total 12 qualifications that includes ICAI, ICSI, ICWA. Sir has got rank in ICWA. Sir got triple pin post graduation in OR and FM. Sir has also qualified in our institute's diplomas. That is ESA, DITL, IndAS, Forensic Accounting and Standards, DITL, and Sir has been holding 8 NSE certifications in financial markets. That includes National Stock Exchange, derivatives, all those. Sir has authored 2 books in standard costing and variance analysis, and first lessons in information technology. That is a famous author, Snow White Publications, Mumbai. And Sir also been awarded, nominated to 13 posts so far, and that includes Chairman of All India Registered Valuers Organization, member FICCI, and Sir has been writer in technology and taxation in numerous journals and newspapers. That includes Hindu Tamil, Nanayam Vikatan Tamil paper, Putiya Talaimuri Kalvi, and he also regularly appear in Tamil TV channels. That includes DD Pothigai, Jaya TV, News 18 Tamil Nadu, Kaveri News, FM Rainbow. Sir has been attended so far 600 plus meetings on GST to various forums, professional bodies that include Chamber of Commerce, Industry and Trade Associations in both English and Tamil. This is only a short list of Sir. Due to lack of time, I am unable to read all those qualifications, but and thank you for giving me this opportunity. Thank you, Ongole ICA. Thank you, Gopala Krishna sir.
Thank you, Shankar Narendra Kumar. Sir, it is up to you, sir. Gopala Krishna Garu.
Oh, thank you. Yeah. The chairman of Ongole branch, CAK Rajendra Prasad Garu, founder, chairman, and very respected senior member, CAK Subbarao Garu, and many of the past chairmen whom I know very personally when I was in the regional council. Special mention of CA Vijay Kumar Garu, and all the present members of the branch, managing committee members of the branch, and also the introduction given by CA Shankar Narendra Kumar, my very good friend Chakka Trivaya Kumar Garu, and Ranganaikulu Kalluri, Madala Satyanarayana, and all the newly formed, they are newly formed members for the coming year 22 to 25. My hearty wishes to the new team, and my congratulations and best wishes for the outgoing team. You have been doing very good activity despite the 2-year pandemic. Ongole branch was able to do and sustain some of the important activities of the institute, and also connecting with members, not only virtually, wherever time permits, even physical meeting also, you have tried your best. So my best wishes and hearty congratulations to the present team who will be handing over to the incoming team. Coming to today's topic, Union Budget 2022. I will not have any presentations. I only want to drive the points which has taken nearly, if you download the entire finance bill, the number of clauses with respect to Income Tax Act alone will be 84 clauses. We have less than 60 minutes time only to cover this 84 clauses. So I'll try to be as brief as possible so that I wish to cover as many provisions as possible. First point, so I know I am addressing my fellow chartered accountant professional brethren. So I will be very not too what do you call it, as too dilute in my discussion, but I'll be at par with technical aspects also. I'll try to cover parallelly. Point number one. Is there any change in the slab rate? No, no change in the slab rate. Already Income Tax Act has all the prescriptions that is required. Maybe there are over expectation because of the technology. Every now and then, because maybe 20 years back, we have Korapati Subbarao Garu here and Mr. Vijay Kumar is here. We can wish to hear them also, because maybe 10 or 20 years back, only after the budget was presented, there will be discussion. Pre-budget, there won't be discussion at all. And today, because of the technology advancement, pre-budget discussion is also there. A lot of hype and expectation is there. And that is the reason why we get the mixed responses. But my one single line response for this budget is, it is a digital budget and it is driving the economy towards a digitized, futuristic India. Point number one, no change in slab rate. But if you have seen the stock market, normally stock market will rally during the budget days, but especially because of one particular announcement. What is that? There was a change proposed in the finance bill with respect to surcharge for individuals. That too with respect to 111A and 112A. What is 111A and 112A? 111A is short-term capital gains. 112A is long-term capital gains. Now, you have your normal, the slab rates, all of us, we know, up to 2.5 nil, 2 lakhs to 2.5 lakhs to 5 lakhs is 5%. 5 lakhs to 10 lakhs is 20%. And 10 lakhs above, it is 30%. But what is the, and of course, education and that health cess is 4%. What is the surcharge? Up to 50 lakhs, no surcharge. 50 lakhs to 1 crore, we have 10% surcharge. 1 crore to 2 crore, it is 15% surcharge. 2 crore to 5 crore, it is 25% surcharge. Above 5 crore for super rich, it is 37%. So meaning on 30% tax, 37% means that will work out to another 10%. So they pay actually 40%. Now, this 111A and 112A, if your income includes the short-term capital gain and the long-term capital gain, please remember, short-term capital gain and long-term capital gain, they have made one very important change. What is it? Up to 2 crore, it is 15%. So that means 50 lakh to 1 crore, 10%. And 1 crore to 2 crore, it is 15% surcharge. Above 2 crore also, If the income includes 111A, 112A, it will be 15%. Meaning, I have a long-term capital gains from equity share or from equity-oriented mutual fund and short-term capital gains from the equity-oriented mutual fund, or of course, 111A tax rate is different. The normal tax rate will be applicable. And for 112A, you have the long-term capital gains. The special tax rate is applicable, which is 10% above 1 lakh. But you compute the tax accordingly. On the tax, you have to. So for your normal income, slab rate applicable. Short-term capital gain, the special rate under 111A. 112A special rate 10%. Calculated. On that, you have to apply 15% surcharge. So meaning, if I have 75 lakhs business income and maybe 1.5 lakhs or 2.5 lakhs, 2.5 crores as my long-term capital gains and short-term capital gains put together, 2.5 plus 75 will be 3.25 crores. So then I am supposed, maybe since I have crossed 2 crore, I have to pay 25% surcharge. No, I have to pay only 15% surcharge. So that is the only change they have brought. So which was actually debated in a forum. No, they have capped it, they have not capped it. So a lot of confusions were there during the budget day. Only very few experts were able to crack it, that particular point, and give clarity on the budget day. Next day onwards, we have got a lot of clarity through various literatures. So this is point number 1. Point number 2, I am sure all of you are very, very eager to know this particular section. 139 8A and 140 capital B. Now, what is this? So far, we have heard about number 1, original return. Then we know what is called as a belated return. 139.1 original return, 139.4 belated return. We have 139.5 revised return, defective return 139.9. They have inserted one more type of return. Now we need to understand UR. Okay, UR is your original return OR, belated return BR. Okay, revised return RR, not a triple R. Triple R is released to be released only on March 25th only. Now this is UR. UR is your updated return. Now we have a challenge, especially past 2 years we have a challenge. What is the challenge? Many clients are walking into our office and they ask, sir, I want to file a return for 1920, 2021 I want to file, now I want to file. We were filing it in the past because 1 year from the end of the relevant assessment year used to be the time for filing the, the belated return. So they crashed it, that 1 year gone. Now it is only financial year, assessment year. So you can file your belated return. Original due date under 139.1 is, if extension is not given, 31st of July. And from 31st of July, if you have crossed it for non-tax audit cases, August, September, October, November, December, only 5 months. That will become belated return. After that, even belated return cannot be filed till the previous assessment year. Belated return could be filed till 31st of March. Now that 3 months also they have crashed. So technically only 9 months is there for filing of return. After that, nothing. So people volunteer themselves. 6.5 crore people have filed the return out of 142 crore population. 6.5 crore have filed return, and another surprise element is 3 crore return is below 5 lakhs. So that means it is only paper, not paper, data. As far as only data for the government of India, there is no DAPU for the government of India. So they want to expand the base. So people who are volunteering themselves to file the return today, they say, I will pay interest, I will pay fees, late fee also I will pay. But I want return, I want that ITR challan, that acknowledgement, I want it. So it is not possible today. So even whatever you fight with the Infosys website, hours together, you say nothing is possible there. So that is the reason why they have brought this particular provision, because they have got innumerable, so many number of requests have come. Why you are not allowing us to file your return? Genuine, what do you call this, representations have come from individual taxpayers and also from business taxpayers. When I'm ready to file return, there should be an opportunity to file return. So that is why there are two types of people here. That those who have not filed return at all. Very good. Those who have filed the return with the tax. They already paid tax and they have filed return. Now, I'll come to the second type. Those who already filed return, can I file updated return? Yes. But plain vanilla situation, let me take. I paid 40,000 rupees tax and I uploaded the return. Now I'm expecting some survey may come, some scrutiny may come, some problem may come because, so I want to be away from all this. Is it possible for me to file an updated return? Okay, the revised return time is over. Okay, revised return time is over. So that means 12 months is over. So once 12 months is over, they say from the end of the assessment year, 24 months time is given. So that means for 21-22, end of the relevant assessment year will be 23. From 23, 24 months will be 25. So till 31st March 25, we can file an updated return. So the shop can be opened now, and so many people, we can even put a board. Till 2 years returns will be supported to be filed here. So till 2 years. So this amendment is applicable from 1st April 2022 onwards. So that means for the financial year 22-23 onwards. Will this be applicable for financial year 21-22? My doubt, because it should have come last year itself. So therefore, it is only applicable for the financial year 22-23 onwards only. So not for the present financial year, it will not be applicable. Now, they have brought a very interesting point here. We know this through our practice. If somebody is coming forward, sir, you file the original return, revised return, we will enhance it, we will give some other figure. Now, we always advise them, see, revised return, if you file, you enhance the income, pay more tax. You enhance the income, pay more tax. It has become a customary. It has become a customary that the custom now has become a law. So what is that? When you are filing your updated return, within 12 months from the end of the relevant assessment year, on the original return, whatever the tax has been paid, tax liability, I must say, the updated return, I must pay 25% as additional tax. So that means to that extent. So then only, and the 25% additional tax has to be paid under section 140 capital B. That is, the proof of payment should also be there along with the return of income. So that is very, very significant point we need to understand with respect to this. Now, if I have not filed a return, and I am sure many will choose this particular route. Many are asking, sir, if I don't file a return, do I have an option to file return later? Yes, the option is now available through updated return. So it is not original return, because original return is on due date I need to file. It is neither a belated return nor a revised return, because you have not filed the original return. So therefore, updated return, straight away I will file an updated return. Done. So you need to calculate your tax, interest and fees and file your return. I am expecting, and not only me, I am sure many of the senior members here also will agree. Many assessees now they will have a relief. But my suggestion to, I am sure my professional friends will agree with me that this is one thing we should not educate our clients that you can file your return till 2 years. No, we have to tell them in exceptional circumstances, maybe if they have failed to file a return, the updated return is possible. But of course, now that because of technology, so many articles and all will be coming now, and they will be educating left and right the assessees. So 2 years. But one thing, they are now opening the gala, their gajana they are opening, and they are very clear that you have to pay tax. So, and if from the end of the assessment year, 12 months later I file, then I need to offer more income and I have to pay additional tax, 50% on the tax which originally I have filed in the normal return, original return. Now this is where the challenge is. Now if I have Refund can I claim? No. If there is a loss return, can I file the loss return? No. If there is already a survey is conducted under 133A, can I file an updated return? No. There has been search that has been initiated. Can I file updated return? No. So the point is, when department has already initiated a steps, so I cannot do. So last return I cannot file. I cannot file an updated return asking for a refund. Maybe I can ask for a reduction in refund. That is possible. So reduction in refund, that portion should work out to that 25% and 50%. So it's a very, very interesting provision and very practical provision. The government has thought it rightly to bring this particular provision timely, because these are the 2 years where many would have missed to file their return on time. Now come to this 158 AB. This is a new section they have inserted. This is a section where Gopala Krishna Raju, there is a assessment 143.2 scrutiny. I have got an addition, and tax liability was there. I am going for CIT appeals. I have won in CIT appeals. So department goes for an appeal to tribunal. In tribunal also Gopala Krishna Raju won. Now against that particular tribunal, they go for an appeal to High Court, Chennai High Court, Madras High Court. Good. And that is pending there. Now we have our Ongole branch chairman, Mr. Rajendra Prasad Garu. Similar case in Ongole, he is also fighting it, and liability has been passed. He also prefers an appeal to CIT appeal. He won, and they have gone for ITAT to the tribunal, to Hyderabad tribunal or to Vijayawada, so wherever the tribunal is. And there also Rajendra Prasad won. Now they are contemplating, the case is very similar. Gopala Krishna Raju's case and Rajendra Prasad's case is same. Now they are contemplating to go for an appeal to the Andhra Pradesh High Court or the Hyderabad High Court or Telangana High Court. Now a similar case is already pending here. Then my jurisdictional chief commissioner or principal commissioner or commissioner, along with Rajendra Prasad Garu's chief commissioner, principal commissioner and commissioner, they will form a collegium, and together they have to decide, record that both the facts are similar and question of law is similar. So therefore, as per 158 AB, litigation management, so additional litigation won't be done in Andhra Pradesh High Court or in Telangana High Court. So that is 158 AB. Good. Now come to 48.2. This is a very, very interesting amendment they have brought. If at all I have paid a tax, income tax, on profits I have paid an income tax. Income tax is it an expenditure? First of all, actually it is not an expenditure. So that is why they have brought that 48.2. So any tax levied on profit or gains, it is not a deductible expenditure. Now you have surcharge. For corporates you have surcharge, for individuals you have surcharge. So whether surcharge paid is deductible, cess you have paid, whether that is deductible. So there are two judgments. One is Rajasthan High Court judgment and Bombay High Court judgment. They have favored that the tax levied under 48.2 does not include surcharge and the cess. So therefore, surcharge and cess paid by the assessee is a deductible expenditure. My God. So, but there is one Supreme Court decision, CIT versus K. Srinivasan. That is a decision which says additional that surcharge forms part of income tax. So you have a dichotomy. These two High Court judgments came after the Supreme Court judgment. So which is quite a dichotomy in the law. To bring a full stop to this anomaly, 48.2 has been amended, and they have included the tax includes surcharge and cess. I repeat, tax includes surcharge and cess, and this particular section is not applicable prospectively, but applicable retrospectively. We are now in 2022. So they have gone 17 years back. So this is applicable from 1st April 2005 onwards. Very interesting. Then Now let me take you to the next interesting question, 14A. Now, what is 14A? 14A is if you have an exempted income. I repeat, if you have an exempted income, you are eligible to get a deduction on the exempted income. So that is what 14A is very special. Now, if you have an expenditure on an exempted income, but the exempted income is neither accrued nor received, but only expenditure is there. Can that expenditure be claimed? Now they have said no. You can actually, as per 14A, there is a disallowance in absence of any exempt income. So you don't have an exempt income at all, but there is a genuine expenditure for earning that exempt income. That expenditure will not be allowed as a deduction, will not be allowed as a allowance unless and otherwise that particular income is accrued. If it is accrued, you claim that particular income. So, or it should be received. Either the exempt income should be received or accrued. So, if the exempt income is not accrued, not received, then this is not eligible for a deduction. So, that is also
small announcement, sir. The account touched 100 maximum participants. Thank you, all the delegates. This is not the first time. See, for majority of the GKRs or seminars are flooded with participants. So this is the charismatic speaker for this South India. Not only South India, for India. Thank you, sir. GKR, sir.
Thank you. Thank you. Now let me take you to 37. 37 is a disallowance on business expenditure. Now, all of us, we understand that in a medical field, especially pharma companies, they used to give gift, travel facility, hospitality, cash, monetary grant to the medical practitioners. Is it allowable expenditure for the pharma companies? For pharma companies, it is a business expenditure because they are the people who actually recommend the medicine. Now, Indian Medical Council Professional Conduct, Etiquette and Ethics Regulation 2002. Under that regulation, the medical professionals are prohibited to receive any gift, travel facility, hospitality, cash from the pharma company. So, Income Tax Act doesn't say anything. You do business promotion, you claim expenditure. So, one side, the pharma companies are claiming expenditure, but the other side, they are not disclosing. For them, there is a professional misconduct. If they receive a gift or a travel facility, it is so that is why the travel facility, they will not receive in their name, they will receive in somebody else's name. So all these things are happening. But here the accounts, in that accounts, they say business promotion for so-and-so doctor. Now, they have brought a very, so that means law itself creates an environment for unscrupulous accounting or modern accounting or thought-provoking accounting. So therefore, they have amended section 37 stating that expenditure incurred by an assessee for any purpose which is an offense under law or prohibited under any other law. If it is offense under any other law, that expenditure will be disallowed here. So a classic example is the Indian Medical Council's regulation 2002. Like that, you have various other regulations also. So that is why this particular amendment is very, very important. Now, this is an elder brother section. You have a younger brother section. Okay. So that is section 28. I repeat, that section is section 28(4). And also an equivalent TDS section called 194R. Now, what is this particular section is all about? This particular section, they make it a point that you have to deduct tax at source. My goodness. So what is this particular provision? Point to be noted, whenever there is a benefit or perquisite given to a businessman. I'll take an example. So I am an oil manufacturer. Now I have dealers across India, or I am a furniture manufacturer, I am a cell phone manufacturer. So I have dealers across India. So for dealers, I will give some benefit or perquisite. Now what kind of benefit or perquisite I will give? Free travel. So I am taking 40 dealers, the best dealers, to Malaysia and Singapore. Free travel, boarding, lodging, everything. For each dealer, I am spending 2 lakh rupees. So 2 lakh into 40, 80 lakhs is an expenditure. I will claim this as an expenditure in my books of accounts as business promotion. But this is a benefit or a perquisite in the course of business or profession for the particular business or profession, business assessee or the professional assessee. This has to be included in his income tax return, offering this as a perquisite. Now, if perquisite is given by the employer adds it and deduct tax from the cash salary. Now, none of the businessmen, they volunteer. We need only Harichandra sons to be born in our country, especially we will ask to the, sir, is there any section 28 subsection 4 perquisite or benefit you have received during the business, so that I will include it in your income tax and pay tax for it. For the accounting accounted income itself, he will find it very difficult to take the money from his pocket to pay the tax. So the perquisite, if you add, the tax will go from where he will pay. So all these will run in his mind. So they don't disclose. Sir, nothing, no benefit, no perquisite. He would have traveled actually. If you look at the passport, everything will be there. So now, what they have done is 194R. They have brought a new section. I repeat, they have brought a new section called 194R, where if the perquisite exceeds 20,000 rupees, I repeat, if the perquisite exceeds 20,000 rupees, you must be surprised before providing such benefit or perquisite. So that means before you give the benefit or perquisite, before you buy the ticket, before you take them for Malaysia, Singapore, you have to pay to Government of India 10% of that perquisite, and then it will be uploaded in the return. It will be uploaded in my TDS return, and that will be reflected in the tax information system. That's all. Govinda. So henceforth, the chartered accountant will have to take a printout. Sir, what are earned income? What are earned benefits? Earned income in accounts it will come. In earned benefits, directly you have to add to the memo of income. That's all, matter over. So nothing can be done here. Nothing can be done. I am telling you, nothing can be done, because 10% is already paid by him. And if he is in the 30% bracket, 20% excess he has to pay. So no other shortcut. Very well planned, implanted section 194R. Okay. So that is with respect to this. Then I am taking you to 80 IAC. There are two sections parallelly I want to mention. One is 80 IAC, another is 115 BAB. Both are for the new companies. If I am a startup company, who have got the certificate from interministerial board from Ministry of Industries, then if my turnover doesn't exceed 100 crore, for 3 years, no tax, tax holiday. For 3 years, no tax, tax holiday under 80 IAC, provided I should start my company, incorporate my company before 1st of April 2022, which is coming now. So that they have extended till 31st of March 2023. Now, I am not a startup company, but I am a manufacturing company. I manufacture oil, I manufacture what do you call it as textiles, furniture, some item I am manufacturing. I am a domestic manufacturing company, new company. Now, to encourage new company, micro, small and medium enterprises, they have given a concessional rate of tax, which is 15%. So where corporates, today corporates, they pay 30% tax, If turnover crosses 400 crores. If turnover is below 400 crore, 25% tax. And these kind of new domestic companies, 15% tax. And you are a startup company, tax holiday for 3 years. And this 115 BAB, that 15% concessional tax rate, only thing is that particular company should have started their operations before 31st of March 2023. They have extended for 1 more year to 2024. So that is 80 IAC and 115 BAB. Now, let me take you to 115 JC. 115 JC is a tax rate applicable for AMT, alternate minimum tax. Now, cooperative societies are also corporate only. They are also a corporate, body corporate. So in the term of a Companies Act, it is called as a body corporate. So cooperative societies are body corporate. Companies are also body corporate. So now, for companies, the alternate minimum tax is 15%. But the alternate minimum tax for cooperative societies till last year was, till current year, it is 18.5%. So from coming year onwards, it will be 15% at par with corporate. So whether it is company also, AMT 15%, cooperative societies also, alternate minimum tax is 15%. That is 115 JC. Now come to a very, very interesting section, 80 CCD, National Pension System. National Pension System, if there are 2 tiers in it, tier 1 and tier 2. Tier 2 is applicable for private sector. Okay, private sector employees. And private, maybe professionals also, they can go for tier 2. Tier 1 is applicable for government employees. Now, central government employee can contribute and the employee also can contribute. If central government employee contributes, they will be contributing 14% of salary. Okay, 14%. Now, that will be included as its perquisite and they will be eligible for a deduction. So, add and subtract. Now, state government, they can only contribute 10%. This was the disparity. Now, how can one government can contribute more, one government can contribute less? So, therefore, on 1st of April 2019, they have brought a change in the national pension system. Okay, you can go to that website. There, state governments can increase their contribution from 10% to 14%. But consequential amendment in 80 CCD was not there. So even though they contribute, so it will only be a perquisite added, but deduction they will not get. They will get only deduction for 10%. So therefore, to make that at par, the parity with central government employees, employer-employee contribution, state government employee-employee contributions, they have brought this particular amendment. Now, coming to a very, very interesting section. This was a press statement. This is actually COVID-19 press statement. Finance Ministry, they gave a press statement when during the second wave. What is second wave? At the end of the second wave, 25th of June 2021. 25th of June 2021, there was a press statement, press release given. What is it? That press release mentioned that income tax will not be charged on amount received by a taxpayer either for medical treatment or on death of the COVID patient, the death proceeds to the family members. Both will not be taxable. This medical treatment payment may be made by the employer, then it won't be perquisite. Sometimes any outsider also will give. So therefore, they have brought 2 amendments. One is 17.2 perquisite, 56.210. 17.2 perquisite is for what? If an employer, because employer has supported the initiatives, okay, that pandemic time, the medical treatment expenditure, many of the employers, they have actually supported their employees for their medical treatment, for them as well as for their family. So Can they include that in their? So of course that will come in their welfare, staff welfare expenditure, especially 21-22, 2021 also we would have witnessed it. 21-22, I am sure many of you will witness huge staff welfare expenditures in the listed companies' annual reports which will be published. Please look at it. Why? Because press statement 25/6/2021, the gates are open. You give whatever you want. We have to safeguard the people. So let the employer support, anybody support. So that is not a taxable income at all. So that is why 56(2)(10), it is income from other sources. For example, for a professional, for a micro, small and medium enterprise, for a small shop owner, he is affected by corona. Some people will crowd fund it and they will contribute. Yeah, take this 50,000 rupees, 70,000 rupees for your medical treatment. So sometimes the government also will give support. And on death of the COVID patient, family member will receive. But there alone they have put a ceiling. The ceiling is 10 lakhs. So the death proceeds up to 10 lakhs not to be treated as an income at all. So that is the section 17(2) and 56(2)(10), which is a very important amendment for pandemic related amendment. Now coming to a section called 79, which is a very, very important section. We have been hearing about disinvestments. For your information, under Income Tax Act, there is no definition called private limited company. The only definition is company in which public are substantially interested, and company other than company in which public are substantially interested. So a public sector enterprise or a public sector company is a company in which public are substantially interested. But when a public sector company, today disinvestment is happening. So what is disinvestment, sir? So the shares will be, LIC is going for disinvestments. Okay. So many of the public sector companies, they are going for disinvestments. When they are going for disinvestments, they may cross the percentage. Okay. They may cross the percentage. The holding percentage will go. Sometimes the more the percentage will be held by outsiders. So the 100% public sector status will go. So because private sectors also, they have stakes there. So, and they may have a holding company, that holding company will hold, or the government will hold shares, maybe 51%. So some percentage they may have. So here they have mentioned that one point, just because they have lost the status of a public sector company, so they cannot be denied the carry forward of losses, because why we are inviting a new investment and new strategic partners, so that the public sector enterprise, they continue the business. Now, one of the main objectives is they have accumulated losses. That accumulated losses, future profits, they can set it off, no tax can be paid. So, if because of that shareholding pattern change, if section 79 disallows the carry forward of loss, then there is no meaning. So that is why they brought this particular amendment for disinvestment, subject to the parent company has a holding of 51% in the erstwhile public sector company. So that is the only criteria they have kept it for 79. Now coming to a very interesting section called 194IA. All of us, we know this. This is the TDS on sale of immovable property more than 50 lakhs, 1%. The buyer, when he makes the payment, he has to deduct 1% and remit it through a separate challan. We know this. But there is an anomaly in this particular section. What is it? The word that is used in this particular section is amount of consideration paid by the transferee to the transferor. But a similar section on sale of immovable property, you have 50C. In 50C, the word consideration is not used. The word stamp duty is used. Now, I'll give you a circumstance. You have to tell me whether applicable or not. The stamp duty value is 58 lakhs or say 60 lakhs. But the consideration is only 45 lakhs. So consideration is 45 lakhs, stamp duty value is 60 lakhs. Now, as per the section, since the consideration is below 50, no TDS, but stamp duty is 60. Now, under 50C, deemed consideration is stamp duty. So, you have the Honorable Chief Minister Jagubai. So, for the Honorable Chief Minister, you will pay the stamp duty on the, you will pay the duty on the stamp duty, but to the central government, you will not deduct 1% TDS because it is below 50 lakhs. So there is an anomaly. So therefore, they have said, if your consideration or stamp duty, whichever is higher, please understand, 1% will be calculated on sum paid or credited or the stamp duty value, whichever is higher. So that means if it is below 50 lakhs is the consideration, above 50 lakhs is stamp duty value, I have to calculate 1% on the stamp duty value, not on the amount paid. So very important change they have brought. So please keep yourself updated with this changes. Now, I am taking you to another interesting change. Especially now, Raju is going to release a film that Not to song is going to come. Triple R film is going to be released. Now, in that film, once a producer, finalizes a film, that means what do you call it as completion of a film. Okay. So now next another our erstwhile director, gentleman director, Kunjumon, KT Kunjumon, he is coming up with a Gentleman 2. These are all very big budget films. Okay. Now Sun Pictures is there. So all Bollywood movies. Now they have this 285B. What is it? There are a lot of speculation. What is speculation? Thalapathy Vijay is taking 25 crores, 50 crores, 100 crores salary. Now who knows? Yeah, who knows? This is only hype people are creating for that particular idol. Now it is only two people will know. The actor will know and the producer will know how much is paid. Now that transaction will be made open. So within 30 days of completion of the film, or film continues, but year end is over. So the year end means accounts you close it within 30 days from the end of the financial year. Okay, you need to, the producer of the film, cinematograph film, has to upload all the details. In no TDS. TDS section is different. This is widening the scope of reporting so that whoever is receiving above 50,000 rupees from the producer, his name will be uploaded by the producer to the income tax department. It is his responsibility. It is then there is one more good point here. Since he is openly giving this information, all these are eligible expenditure for him. So naturally, producer will upload this information. So now a lot of planning has to be done in making a film, not only with respect to cinematograph films. Please understand event management, documentary production, production of program for telecasting on television. Now OTT platform is also there. Nowadays 15 minutes people and all, they make films and they release in OTT. Serials are made. Okay, web serials are made. So everything will come under this. So whoever is, there are people who are taking salary 1 lakh rupees per day, 2 lakh rupees per day, 1 lakh per month. Okay, consolidated pay. So everybody will come under this. So it is not only TDS. TDS section is different. That is a professional income 194J, 10% they will deduct. But here, it is the obligation on the producer to upload this data if payment is made more than 50,000 rupees. Very, very interesting. So that means that information also will be reflected in your income tax annual information statement. TDS amount also will be there. Amount also will be there. Sometimes TDS amount will not be there, but this amount will be reflected. TDS will be less, but this amount will be more. So all kinds of interesting points you will come across, and maybe another 1 or 2 years, you will see a lot of, there will be very good fun in reading the annual information statement. Many stories which have not been told or shared with chartered accountant will now be shared by the respective assessees, because You will actually take pencil and pen and tick one by one. What is this? What is this? Why you are last year, whether it was there? No, last year also it was. Last year you didn't say, and we didn't include it. Last year I told, sir, you have not included. No. Henceforth, the document is final. Annual information statement, entire kadai story will be there in that. Now come to the next interesting section. I am sure all of you are very much eager for the virtual digital assets. Okay, the virtual digital assets 115 BBH. Very carefully, because there are 4 sections. 115 BBH is a special tax rate. Normally 115 means concessional tax rate, but this 115 BBH is highest tax rate. Damal, straight to sixer. This sixer is not even crossing the boundary. It is crossing the stadium at all. Straight to sixer, it goes beyond stadium. 30%. And virtual digital asset. This is special and is not concessional tax rate. Special tax rate for virtual digital asset. And there is a TDS provision also called 194 capital S. And can I give? Nowadays, the wedding invitation is coming through mobile. Okay, wedding invitation is coming through mobile. Now they say, we don't come to wedding, you can watch the wedding, the function in the mobile itself. And they will send you GPay and all those and all. You have to send them MOI also in mobile. And they may send the maybe the lunch or dinner through Swiggy and it will be delivered to you. Based on the amount what you have delivered, the package will be different. Now, can you gift Bitcoin to the father? You can gift. Now, if you gift a Bitcoin, that will become an income from other sources under 56.210. You have to understand one thing, they have never used a word called Bitcoin in the definition at all. The definition is 247 capital A. 247 capital A. They have, this is a new clause. They say, any information or any code, any number or any token generated through cryptographic means. That's all, matter over. Everything is there here. Now, there has been a lot of debate outside that Bitcoin has been now regulated through this. No, I want to mention one thing. On 24th December 2013, Reserve Bank of India, they have brought one notification that RBI cautions users, all the citizens of India, not to deal with virtual currencies. They don't say don't deal. They caution. It is at your risk you do it. So don't come crying to me, teacher, he has scolded me, he has hit me, I am feeling bad. Don't come to RBI. Don't bring any economic offences notice or complaint and all. We will not entertain. When RBI has given this on 24th December 2013, all of you, I am sure all of you will agree with me that this Bitcoin is a cryptocurrency. This is not regulated or managed by a government or a political party or any country. It is only managed by an individual or a group of individual or a cartel. It is based on the blockchain technology. Now, point to be noted, people, the group, they themselves, they create hype. And today, whenever there is a transfer of the Bitcoin, there is a profit. That profit is taxable. Now, where is the provision for taxability? Many they are asking, no, where is the provision in the previous law? No, that is why it is income from other sources, residual section. People take a stand that it is residual section. Now, they have brought a clarity. Now, there is one more question people ask. I have a profit in Bitcoin for 7 lakhs. I have a loss for 6 lakhs. So therefore, I will set off 6 lakhs from 7 lakhs. On 1 lakh alone, I will pay tax. What is this? So that means the entire transaction by default is made legal. So that is why now they have brought this provision. Very, very interesting provision they have brought. What is it? On 6th April 2018, Reserve Bank of India has brought one more, what do you call it, as a notification, where prohibition on dealing in virtual currencies has been prohibited for the member banks. For example, Gopala, Krishna, Raju, I have Bitcoin worth 10 lakhs, then can I give that as a security to the bank and take a loan on that? No, it is not possible. So banks are being prohibited. So to deal with the virtual currencies. So 24th December 2013, RBI has cautioned, and 6th April, there is a prohibition. Now, that is the reason why on 11th February 2020, the government is coming out with a CDBC, Central Bank Digital Currency. Remember guys, Central Bank Digital Currency is your currency only, but it will not be in paper form. It will not be in paper form. It will be in a crypto form. It will be based on blockchain technology. Like how you open a bank account with a bank, you have to open a blockchain account. And in the blockchain account, the money will be transferred by the bank. You have to confirm. When you transfer the money from your virtual currency to some other virtual currency account, that has to be again confirmed by the bank. So both the parties, for every transaction, there will be a confirmation has to be done. That is why it is called block, one after another, one after another. So this technology is going to change the next 4 or 5 years. People will be used to it. Maybe keeping cash in pocket will slowly be phased out, and people will move for virtual currency. And remember guys, virtual currency cannot be traded. Virtual currency is your normal currency, normal bank account, but it will be in your blockchain technology format. That's it. Now, that has also been introduced in Part A of the budget speech. Part B of the budget speech is only with respect to the taxability of the virtual digital asset. We need to understand one thing with respect to 115 BBH, that 30% tax rate is on the profits on transfer of the virtual digital asset. We need to also appreciate there is no deduction for any expenditure, no set off, and no carry forward. My goodness. So that means if you have a loss, the loss is yours. So this is a very serious provision, very serious provision. So unique provision with respect to virtual digital assets. And I'm sure maybe in the coming days forward, and even today in accounting standard, we don't have an answer whether the Bitcoin is an investment or whether it is a bank account. Okay. So even today, we don't have an answer. There are various interpretations. People can give, you ask me opinion, I can give an opinion based on the situation, circumstances, facts. But we don't have a literature or a prescription. So that is with respect to 115 BBH. 194S says, any person, the word is called any person who transfers, I repeat, any person who transfers, okay, who transfers this virtual digital asset on transfer by, if I transfer, somebody has to pay money to me. So they have to deduct 1%. So how these people will get registered, and how that means the entire the Bitcoin or the cryptocurrency transactions will now be opened up. So far, the cryptocurrency transactions are only been reported by the respective cartels. Now, through 194S, they have to say yes to every transaction which happens with respect to cryptocurrency. Guys, thank you very much. It's almost 7:03. I will take last 1 minute with respect to one more provision. That provision is with respect to 179, which is a very, very interesting provision, where 179 is liability of directors of private limited company liquidation. So once a company is liquidated, if there is a tax liability, then who will pay? The directors only have to pay. But there is a misnomer. What if there is if the company is not under liquidation and the company can't pay, that means company is not solvent. Can I proceed against the director? Yes, you can do so. So therefore, the section name is amended from liability of directors of private limited company liquidation to liability of directors of private company. That's it. So that means not only liquidation, even if they are in insolvency, even if they are solvent, the directors are liable for the dues, tax dues, which has not been paid by the company. So which is 179 main amendment. There are two more major changes that has happened, which alone will require another 2 hours. One is total rationalization of the faceless assessment through 144B section. Second, lot of changes they have brought with respect to charitable trust and institution with respect to the dual scheme. The, what do you call it, a scheme 1 is 1023C and the scheme 2 is there is a regime, we can call it as a regime. So first regime is 1023C, second regime is your 12AA or 12AB scheme. So they have brought lot of I will call it as amendments and fine tuning of the procedures. So which alone will require another 1 hour to debate, but I will bring to your kind attention innumerable changes has been brought out with respect to charitable trusts and institutions, as well as they have streamlined all the bottlenecks with respect to faceless assessment scheme. So which it requires, and I'll place this before the chairman of Ongole branch to have a separate 2 CP seminars on these 2 topics separately. Thank you very much. And thanks to Ongole branch management committee, chairman, past chairmen, and all the members who are present here virtually, the full house virtual members. Special thanks to all of you for being very, very patient for this budget program today. Thank you very much. Over to the MC team of Ongole.
Yeah, thank you very much, sir, for your wonderful presentation. It's excellent, and you have covered a lot of points in this finance bill, which are very, very interesting, like reduction of the cess surcharge on the capital gains or taxing cryptocurrency. You have covered so many intricacies, sir. Thank you, sir. Now, still our house is houseful, 100. Now we have a very big task before me, how to invite our Subramaniyan, sir. From on behalf of Ongole branch, we once again thank you, sir. As informed by you, definitely we'll have a separate seminar for the scrutiny assessment for the remaining topics. Thank you, sir. Now I request either one or two members to leave the meeting so that we can invite our technically it is not possible for us to invite or to get into Zoom for our indirect tax faculty, Subramaniyan, sir. Yeah, now 5 vacancies have come. Now, over to moderator.
Thank you. Now I request CH Krishna to present the biodata of the second technical session of indirect taxes by the speaker, Sri R.Subramaniyan. Krishna.
Sir, inpistunda sir?
Inpistunda.
Okay. One second. Sir, join ayara chustunara. Just call this 2 minutes annaru.
Okay, sir.
Subramaniyan sir inka join ayinatledu.
Murali, wait.
Okay, sir.
Hello. Why don't you ask Gopala Krishna
Yes, sir.
to fill the gap? This talks some other thing in the same subject which you have taken. There is a gap of 2 or 3 minutes.
Yeah. Actually, sir, Nallam Gandhi Krishna Garu has asked a point. Thank you very much, Nallam Balakrishna Gandhi ji. What about the Supreme Court judgment declaring crypto is not an offense? Even Reserve Bank of India doesn't say it is an offense. Reserve Bank of India only say, at your risk, please do it. Point number 1. Point number 2, Reserve Bank regulates only the banks. So they have given a direction to the banks, don't deal with virtual currencies. So they have never used a word called the virtual currency, that means the cryptocurrencies, or dealing with that is an offense. It is it is illegal, nothing like that. So they have said that it is at your risk, you can do it. The only thing is, since government is not regulating and they don't have a control on that, Reserve Bank of India has taken a stand like this. So that is
Good evening, Subramaniyan sir. Subramaniyan sir has joined.
Yes, sir.
Yeah, you can continue, sir. 1 minute. You can continue your last point.
Okay.
And then we can invite Subramaniyan sir.
That is the reason the Supreme Court, the Honorable Supreme Court judgment is also in sync with Reserve Bank of India's notification. So both are in sync only. And point is, virtual currencies can be dealt by the respective investor at their own risk.
Thank
And
you, sir.
Income Tax Department will only come as a shadow partner. You made a profit, give me 30%. Matter
Yes,
over.
yes, I understand.
Thank you very much.
Thank you, sir.
Murali to present speaker.
Okay, sir. Thank you. Thank you, Ongole branch, to giving this opportunity. I am Krishna CH, practicing at Singrai Konda. Today, I am privileged to introduce one of the renewed resource person, Sri R.Subramaniyan. C.A. Subramaniyan R is BSc graduate, CWA, FCA, and law graduate, practicing as a chartered accountant since 1996. He has over 25 years of in-depth professional experience in direct tax and indirect tax practice, and he is the founder and the senior partner of Subramanian and Associates, headquartered at Chennai and full-fledged branch office at Bangalore. His area of specialization includes income tax and GST, beside the recently repealed legislation of service tax, central excise, central sales tax, and state VAT. He has delivered presentations in over 700 orientation seminars on GST. He addressed seminars on GST even prior to its introduction with effect 1st July 2017. He continues to address seminars or meetings on GST post-introduction. He also is the unique distinction having trained government and private sector employees on the nuances of GST. C.A. Subramanian regularly appears before all the direct and indirect tax authorities, including CIT appeals, ITAT, and VAT tribunals. He also trains the GST officials of state and central government. He is also approved the valuer accredited IBBI. C.A. Subramanian regularly addresses members and students in the seminars or study circles meetings conducted under the auspices of the Institute of Chartered Accountants, Institute of Cost Accountants of India, and Institute of Company Secretaries of India, besides members of various Chamber of Commerce, associations, and other bodies representing the trade and industry. He has been selected as a GST faculty for the Institute of Chartered Accountants of India by the Indirect Tax Committee. He has contributed to the preparation and the publications of technical guide on annual return and the GST audit brought out by the Institute of Chartered Accountants of India. With this, I introduce the speaker to the August gathering. Thank you so much.
Thank you, Murali.
Thank you,
Sir, Subramanian sir, welcome, sir. You can take the session, sir. Yes.
Good evening. Chairman Mr. Rajendra Prasad sir, Secretary and other members, organizers. Thank you for giving me an opportunity to share my views, thoughts on the Finance Bill 2022, particularly the indirect tax proposals, Now, can I share the screen, sir? Hello? Hello? Screen sharing. Screen sharing, is it possible?
Yes, sir.
Yeah.
Can you check up, sir?
Yeah, I am checking. So, what we are going to discuss is only the important, Finance Bill 2022 proposal that I am going to discuss. What are all very important proposals that alone we are going to discuss. We will go one by one. First, let us go into section 50. Section 50, subsection 3. Section 50, subsection 3. Interest payable on late filing of return or input tax, late payment of tax or input tax credit reversal.
But the page is not reflected.
Yeah. Is it visible, sir? Is it visible?
No, only the first page with your title.
Is it visible now?
Yes, sir. Visible, sir.
Yeah, right. So let us go into that very important amendment in section 50 subsection 3. Sir, earlier section 53 of the Cgst Act. Cgst Act talks about.
It is not moving, sir. It is only first slide we could see.
Oh, only first slide.
Double click, sir.
Double click. Double click. Double click. Yes. Okay, sir. Is it moving?
No, okay, sir. No, okay, sir.
Yeah.
Sir,
now
make it full screen, sir. It is coming small screen.
Full screen. Full screen.
Sir, slideshow. You start the slideshow, sir.
Go to slideshow, sir.
Okay now.
It is very small, sir. Not visible. You start the slideshow on the menu bar. From the beginning, sir. From the beginning.
Is it okay?
From beginning, sir. There is another option, slideshow from the beginning. From the beginning.
Yeah.
From the beginning, sir.
Left, sir. Left.
Yes. Okay. Now, all right.
It is in process, sir. Just one round symbol is coming.
It's on 17. It should come back to 2.
Yes.
The screen is showing 17. So it should come back to 2.
No. Sir, could you close and reopen it? It seems that system, there is a hang.
Is it all right now?
No, sir. Only 17 slide we could see, sir.
Huh?
Only 17 slide.
17 slide?
Serial number 17 we could see. Substitution of section 41 only. Now, yeah. Go up, sir. Little up.
Go.
Select the first slide. It's now it in 20.
Yeah, I am not going in sequence.
Okay.
I am not going in sequence. Okay.
Okay, sir.
First I am covering section 53. Now it is visible. Section 53 is visible.
Make it full screen, sir.
Make it full screen.
Visible.
Okay, right.
The only thing, kindly make sure that we are able to read on the screen.
Okay. Is it all right now?
Not yet.
Okay, sir. Continue, sir. Yes.
Right. Is it? You are able to see it? You are able to see it?
Yes, sir.
So first I am going to discuss clause 110 of the finance bill. Section 53 of the Cgst Act. Sorry, earlier section 53, earlier section 50 subsection 3. It talks about the interest. A taxable person who makes an undue or excess claim of input tax credit. So therefore, if there is any undue or excess claim of input tax credit, you are liable to pay the interest. Not exceeding 24%. This is a earlier provision in section 50 subsection 3. Now this section is being omitted. The section is being omitted. No, section 53 now it says where the input tax credit has been wrongly availed. and utilized by the registered person. So therefore, earlier if there is any undue or excess claim, you are liable to pay the interest. Now it says that input tax credit has been wrongly availed and utilized. So once it is wrongly availed, not utilized, no interest under section 53. Earlier it is not like that. Earlier if it is a excess claim, that's all over. You are liable to pay the interest. Now it should be wrongly availed and utilized. If both the conditions are satisfied, then only the interest will come. Then only the interest will come. So this amendment is from 1/7/2017. It is a retrospective amendment. And they have also clarified that the rate of tax is only 18%. The rate of tax is 18%. So this is an benevolent amendment, welcome amendment. Earlier provision talks about once you claim excess, that's all. Whether you utilized or not, you are liable to pay interest. Now the section says that wrongly availed and utilized, then only the interest will come. Otherwise, interest won't come. If you taken any credit wrongly and if you have not utilized it, the question of interest will not come. The question of interest will not come. This
Sir,
is
is there any definition for wrongly availed, sir?
yes, sir.
What is meant by wrongly availed?
Wrongly availed. Suppose assuming that I took some blocked credit. It is a credit, blocked credit, but I wrongly availed. There are certain credit which are all ineligible, but I took it as availed. It is being wrongly availed, but I didn't use it. If I use it, then I am liable to pay the interest. If I didn't use it, I took it wrongly, but I didn't use it as on today, then in such situations, the no interest will come under section 50 subsection 3. The rate of interest is 18%. So this is a very interesting amendment in section 53. This is a proposal. So therefore, you have to wait for the notification and all the state government they have to pass. So therefore, you wait for this. But this is a welcoming amendment. This is the first amendment in section 50 subsection 3. The next important amendment is section 49. Section 49 of the Cgst Act. It is almost a bomb. It is almost a bomb. Say what it says section 49. Earlier 4910 is being removed. Is omitted. Now new 4910 says, sir, am I audible? Am I audible? Am I going fast?
Sir, audible, sir.
Audible. Now I'm not going fast, you know.
Yes, yes, sir. Yes, sir.
Right. So otherwise I will, reduce my speed. So 4910 is a very interesting section. 4910 it says, earlier 49 says that you are eligible to claim the credit on provisional basis. Correct? You are eligible to claim the credit on provisional basis. That is removed in new section 4910. In new section 4910.
Sir, slide was not moved, sir. Slide was not moved. Earlier side is visible. Earlier side only visible.
Now?
Now also, sir.
Is not moving.
Yes, sir. Yes, sir.
I am moving it here. I don't know what is happening. Now, sir.
Now also the 21 slide is there, sir.
21 slide is here.
Now it is moved, sir. Now it is moved.
1 minute. I don't know what is. Now you are able to see 49,
sir. Yeah.
So
the amendment in section 49, right, sir?
Therefore, earlier section 49 talks about a provisional credit. You are eligible to claim the credit provisionally. Now 4910 says you are eligible to claim the credit on a self-assessment basis. What do you mean by the self-assessment basis? Sir, I know my output tax liability. I know my input tax credit. I can find out what is my tax liability and I can pay the tax. This is called as a self-assessment tax liability. So therefore, instead of provisionally, now it is says that self-assessment tax basis. So therefore, that is a second important amendment. Very important amendment is, it says further, section 4910, be with me. Section 4910 says further, section 4910 says further, 1 minute. Section 41. Section 41 says further, it is not 49, 41. Section 41 says further, the credit of input tax credit, be with me, the credit of input tax credit availed by a registered person in respect of supply of goods or services or both, the tax payable where has not been paid by the supplier shall be reversed along with interest. Along with interest. So therefore, now what it says, section 41. 41 says, if the supplier, say I purchase a goods from the chairman sir Rajendra Prasad sir, I purchase a goods. Rajendra Prasad sir not filed the return. He has not paid the tax also. Now this section 41 says that I have to reverse the credit. I have to reverse the credit. The reason is very important. Where the tax has not been paid by the supplier. Here the Rajendra Prasad not paid the tax. So therefore the section says that I have to reverse the credit. So this is a far-reaching amendment. There are certain decisions under the GST law. It says very clearly, because of the supplier fault, you cannot ask the recipient to reverse the credit. There is one Madras High Court decision also there, Breathal Enterprises, and then another one decision, Madras High Court decision. All it says that the recipient, he has paid the tax, he has paid the consideration, and he received the goods, and he is having the possession of invoices. Therefore, again, you cannot disturb him because the recipient already paid the tax to the supplier. Here, the defaulter is only who? The defaulter is only the supplier. The supplier not paid the tax. The supplier is not paid the tax. So, now the act is being amended. Now this act says that if the supplier not paid the tax, the recipient he has to reverse the credit. The recipient he has to reverse the credit. Sir, not only that, the recipient he has to reverse the credit along with the appropriate interest. Along with the appropriate interest. So therefore, now you have to be very careful with your supplier. If the supplier not paid the tax, now the recipient he has to reverse the credit. My view is this provision is required to be challenged because whether the supplier is paid the tax or not, I don't know. I don't know any mechanism to find out whether the supplier paid the tax or not. So therefore, this is, this is a condition is being imposed on me, which is impossible to do it. Which is impossible to do it. This condition is impossible to complain. This condition is impossible to complain. But the act says, yes, you have to reverse it. And then the proviso is also being inserted. There is a proviso is being inserted in section 41. What it says, once a supplier paid the tax. Sir, once a supplier paid the tax. Say for example, I purchased the goods from Rajendra Prasad sir in the month of January 2022. The department came to know in June 2022 the Rajendra Prasad sir not paid the return, not paid the tax. Therefore, they will not go to Rajendra Prasad sir. The department will not go to Rajendra Prasad sir. The department will come to me. Subramaniyan, you only purchased from Rajendra Prasad. You please reverse the credit. You please reverse the credit. Sir, I reverse the credit. After 3 or 4 months, Rajendra Prasad sir, he filed the return and paid the tax. He filed the return and paid the tax. Now the act says you can take the credit once a supplier paid the tax. So therefore, I can re-avail the credit. One, I have to reverse the credit, and then once the supplier has paid the tax, once the supplier paid the tax, I have to re-avail the credit. Sir, I can re-avail the credit. I have no issues at all. I can re-avail the credit. Sir, what happened to the interest? What happened to the interest? So the interest is silent. It doesn't talk about the interest at all. So therefore, Rajendra Prasad already paid 3 months delay, already paid the interest. I am also paying the interest because I purchased from Rajendra Prasad. Rajendra Prasad not paid the return, not paid the tax. I reverse the credit. I also paid the interest. So therefore, this provision is to be, which we have to represent to the government. This is a draconian provisions. So this requires the recipient to reverse the credit, which is not the intention of the law. I am seeing, when the law was introduced, they talked about the seamless credit. Today, I am seeing no credit at all. From seamless credit, I am seeing sealess credit. That's all. No credit at all. Because I have to reverse, if the department he committed a mistake, I have to reverse the credit. So this is one of the amendment in section 41 of the CGST Act. Now we will go into very interesting.
Or prospective, sir?
Yes, sir. These are all will be prospective. These are all will be prospective. Once the notification issue and all the state government, once they have passed an amendment, so it will take at least another 1 year because Finance Act 2021 came into effect only in January 2022. So therefore, this will also take another 6 or 7 months, to be amended. Yes, yes, sir. The next very important amendment is Section 16(4) of the CGST Act. Section 16(4) of the CGST Act. Sir, all you know that for you to claim the credit, you have to fulfill certain conditions in Section 16. You must be the possession of the tax invoice. You must receive the goods or services, and the recipient has to file the return. The supplier has paid the tax. So these are all the conditions you have to fulfill. These are all the conditions you have to fulfill. Sir, one of the conditions in Section 16(4) is for you to claim the credit. For you to claim the credit, you have taken all the credit before September month due date. That means, so you have to take the credit in your GST R2B before the September month of the due date, correct? So therefore, October 20th, you have to take whatever the credit you missed. So you have to take it in the month of September return. If you fail to take in the month of September return, and then you cannot take the credit at all, because Section 16(4) says very clearly, you have to take the credit. You have to take the credit before September month due date. Before the September month due date. That means October 20th. October 20th. Sir, now Section 16(4) is being amended. Section 16(4) is being amended. It says that you can take the credit up to 30th November. Up to 30th November of the following the end of the financial year. Sir, what happened under the income tax law? Income tax law, my due date return is for tax audit September 30th, and then I have to file my tax audit report in October. Therefore, there are a lot of representation to the government. At the time of finalization of the account, we found a lot of mistakes, but we are not able to rectify. There are certain credit missed, we are not able to take. There are certain credit note which we have to raise, but we are not able to take. So therefore, considering all the practical difficulties, now the date is extended up to 30th November. So that means you can take the credit, input as credit, whatever is missed, you have to take it before 30th of November. Sir, please be careful. Please be careful. It is not October month return. It is not 30th November return. It is talks about the date. Date is 30th November. So therefore, you have to take the credit before 30th November. So this is also a very welcoming amendment. This is a welcoming amendment because at the time of finalization of accounts only, we found certain mistakes. We found certain, credit which we have not taken. So therefore, all those things which you can take now after this Section 16(4) is amended. So that is in respect of Section 16(4). That is in respect of Section 16(4). Now we will come to Section 38. So this is another big bomb. Another big bomb. What Section 38 says? Sir, earlier Section 38 is being omitted. Earlier Section 38 is being omitted. What about earlier Section 38? Sir, earlier Section 38, it talks about the inward supply. It talks about the inward supply. A person who is in receipt of inward supply, he can verify, he can modify, he can delete, and he can communicate to the supplier. Now this GSTR1, GSTR2, GSTR3 is being removed. Therefore, Section 38 is also being omitted. Section 38 is also being omitted. No Section 38. No Section 38. Now the new Section 38 came into effect. The new Section 38 came into effect. What section? New Section 38 says. The new Section 38 says very clearly, very important. It says very clearly, the detail of outward supplies furnished by the registered person and such a supply auto-generated containing the detail of input as credit shall be made available electronically to the recipient. So that means now Section 38 says once the return is furnished by the supplier, automatically the input tax credit availability will be generated. So generated to the recipient. Very important. So the detail of input tax credit shall be made available electronically to the recipient. That means GSTR2B. So therefore, the supplier filed the return. The supplier filed the return. Immediately you will get, once he filed it in the due date, immediately it will be auto-generated in GB, in GSTR2B. That is Section 38. And then the Section 38 further provides, very important, further provides, the auto-generated form GSTR2B shall consist of two parts. First part GSTR2B talks about eligible credit. So that means those credit I am eligible to claim the credit. So therefore GSTR2B will contain a two parts. one part's eligible credit, other parts is a non-eligible credit. So therefore, once it is generated in 2B eligible part, you are eligible to claim the credit. You are eligible to claim the credit. So therefore, the section 38 GSTR 2B consists of here two parts. Part A consists of eligible credit. Part B of GSTR 2B consists of ineligible credit. Further section 38 says, it says, detail of the inward supply in respect of which credit of input tax credit may be available to the recipient. May be available to the recipient. So therefore, detail of credit which is available to the recipient, detail of the credit which cannot be available to the recipient, it will be automatically generated. Okay. And then it put further conditions. It says very important, on account of the detail of the said supply being furnished. Sir. So therefore, section 38 says that yes, it will be generated in GSTR 2B. GSTR 2B consists of two parts. One is available and another one is non-availability. Further, it says by any registered person within such a period taking a registration as may be prescribed. So first condition is you are not eligible to claim the credit in respect of a registered person who purchased goods who is a new registered person. So therefore, if he is a new registered person, you are not eligible to claim the credit. What it says, sir, I purchased the goods from the supplier who is registered now only. I paid the tax and I got the goods also. How I am claiming the credit? Now section 38 says we will prescribe up to what time in respect of a registered person, new registered person, credit can be available. So therefore, in respect of a new registered person, the Act is going to prescribe the time period up to 2 months. In respect of the registered person, you are not eligible to claim the credit. Up to 3 months, in respect of the registered person, you are not eligible, new registered person. So therefore, this is one of the condition in section 38. So therefore, by any registered person within such a period, taking a registration, that's very important. This is the first condition. The second condition, sir, the supplier defaulted the payment of tax. The supplier defaulted the payment of tax, and where such a default has continued. Sir, supplier not paid the tax. He defaulted the tax, and the default period is continuing for 2 months or continuing for 3 months. Even in such a situation, you are not eligible to take the credit. Sir, whether it is 2 months, 3 months, 6 months, the rule going to prescribe. So as may be prescribed, the rule will prescribe. So therefore, you must be very careful. If you are purchasing from the new registered dealer, the Act says, I will prescribe up to what time you are not eligible to, up to what period you are not eligible to claim the credit. And second, if the supplier is defaulted in payment of tax, even in such a situation also, you are not eligible to claim that. The third very important is, sir, the supplier, he has taken the excess credit. If the supplier has taken the excess credit, I am not eligible to claim the credit. The section says that if the supplier claimed the excess credit, even in such a situations, I am not eligible to claim the credit. And then it says very clearly, the supplier is liable to discharge the tax, on the output at certain percentage. Say for example, Rule 86B. So Rule 86B says that in respect of your outward supply, you can take the credit only 99%, only the 99% of your output tax supply. Balance 1%, you have to pay by cash. Even though you have a accumulated credit. Sir, if the supplier not followed the Rule 86B, this provision says the recipient has to reverse the credit. So therefore, you must be very careful. One, in respect of a new registered person, the Act is going to prescribe the period. In respect of a default in payment of tax, Act is going to prescribe the period. in respect of non-payment of tax, excess claiming of input tax credit, all the recipient is liable to pay tax. All the recipient, he has to reverse that credit and he is liable to pay the tax. The next very important is, as availed the credit of input tax credit on an amount exceeds the credit that can be availed by him. So therefore, if the credit is more than that, he is entitled only 1 lakh. Suppose if he took 1.5 lakhs, the recipient he has to reverse that credit. So that is very important. So therefore, now section 38, it says that GSTR 2B will be automatically generated. 1, it will consist of 2 parts. Parts A is in respect of eligible credit. Therefore, the GSTR 2B itself will say, this is your eligible credit. GSTR 2B, another part is called as a non-eligible credit. Non-eligible credit is in respect of newly registered person, defaulted in payment of tax by the supplier. Tax payable in GSTR 1 is more than the tax paid in GSTR 3B. Claimed ITC more than eligible. Default in payment of tax, and such a person as can be prescribed. So therefore, this rule, this section 38 is another big bomb. It says that you have to fulfill certain conditions for you to claim the credit. So this is a major amendment in section 38. The old provision is omitted. Now the new section puts lot of restriction for the recipient to claim the credit. Now let us discuss section 16. What is this? Section 16. What is this? Very important. Sir, all you know that what are all the conditions which you have to fulfill for you to claim the input tax credit. From January 1, 2022, the section 16AA of the Cgst Act is amended. It says that the supplier he has to file the return and it must be communicated through GSTR 2B. Once it is communicated in GSTR 2B, you can take the credit. If nothing is generated in 2B, you are not eligible to claim the credit. Even though you have invoice, even though you have paid the tax, even though you fulfilled all the conditions in section 16. So therefore, from January 1, 2022, section 16AA is amended. It says that GSTR 2B, Rule 36.4 is also being amended. It says that GSTR 2B is a form on which you are eligible to take the credit. Sir, very important is. Sir, whether this section 16 2AA or Rule 36.4, is it applicable? Is it applicable only for January 2022 return or even for December 2021 return? Sir, be with me, sir. Whether it is applicable for December 2021 return or even for January 2022 return. Section 16AA is amended with effect from January 2022, with effect from 1/1/2022. Rule 36.4 is also amended with effect from 1/1/2022. Sir, now you are going to file your December 2021 return. In January 2022, you are going to claim the credit. So at the time of claiming the credit, the Rule 36.4 is in a statute book, which is effective from 1/1/2022. So therefore, my view is that even for December 2021 return, you have to check your GSTR 2B, and if it is auto-generated in GSTR 2B, and if the credit is appearing in GSTR 2B, and if it is eligible credit, then only you are eligible to take the credit. Otherwise, you are not eligible to take the credit. Sir, there are view it is applicable from January 1, 2022. Therefore, it is applicable for only for February. I am not subscribing the view, because you are availing the credit on 20th January. On the date of availment of credit, Rule 36.4 is there in the book. Rule 36.4 talks about GSTR 2B. It says very clearly, if it is auto-generated in GST or 2B, so therefore, in January 2022, it is there in your statute book, therefore you are eligible to claim the credit. Once it is auto-generated in GST or 2B. Sir, this is in respect of the amendment made in January 2022. Now, through Finance Bill 2022, sir, through Finance Bill 2022, sir, Section 16 2BA is inserted. Section 16BA is inserted. What this section talks about? So this section says very clearly, you are eligible to claim the credit. Very important. You are eligible to take the credit. Once it is communicated, very important, once it is communicated to the recipient, and if it is not an restricted credit under Section 38. So that is why I discussed first Section 38. So Section 38 put lot of conditions on you. It says that if it is a newly registered person, we will prescribe when you can take the credit. If the supplier defaulted the payment of tax, we will prescribe when you can take the credit. If the supplier claimed more credit, we will prescribe when you can take the credit. If the supplier not followed Rule 86B, then we will prescribe when you can take the credit. Therefore, Section 38 gives you lot of restriction. So therefore, for you to claim the credit under Section 16, first you should not be a restricted credit under Section 38. Restricted credit under Section 38. That is why first I covered Section 38. So once if you know Section 38, then only you can understand Section 16. Otherwise, you cannot understand Section 16 to be. So therefore, Section 16 to be is very clear. It says if it is communicated and if it is not, very important, and if it is not, and restricted credit under Section 38. Sir, who will restrict the credit? Sir, your GST or 2B will automatically generate it. GST or 2B restrict the credit. GST or 2B will give you, these are all the credits you are eligible, these are all the credit you are not eligible. You are required to take the credit which are eligible as per GST or 2B. Which are eligible as per GST or 2B. Sir, there are practical difficulties, sir. There are some practical difficulties. I will tell you, sir. Sir, in the month of September 2021, a supplier filed the return. In the month of September 2021, the supplier filed the return. Sir, the recipient received the goods in January 2022. The recipient received the goods in January 2022. Sir, in January 2022, it will not come in GST or 2B. Why? The supplier already raised an invoice in September 2021. The supplier already filed in GSTR, GSTR 1 in September 2021. Therefore, it will be automatically reflected in GSTR 2A of September 2021. Whereas I filed the return in the month of January 2021. Sorry. Whereas I received the goods in the month of January 2021. Now I am going to claim the input tax credit. I am looking in GSTR 2B. GSTR 2B, nothing will be generated, sir. The reason is supplier already filed the return in September 2021. Sir, my view is in January 2022, you can take the credit. You can edit the 2B. You can edit the 2B and you can take the credit. Provided if you have not taken in the month of September 2021. Don't take September 2021 as well as in January 2022, which is not correct. So therefore, you must be very, very careful. Sir, there are certain credits, sir. Assuming that, sir, the credit is related to September, October, November 2021. The supplier is filing in the month of January 2022, sir. The supplier filing in the month of January 2022. The supplier filing in the month of January 2022. Sir, September, October, November 2021. The supplier is filing in January 2022. So therefore, it will be automatically generated in GST or 2B of January 2022. Whereas in my books of accounts, sir, it will appear in the month of September, October, and November, because I received the goods and I received the invoices. I accounted in the month of September, October, November 2021. Whereas he is filing the return, my supplier is filing the return only in the month of January 2022. So therefore, I am eligible to claim it. Therefore, I am eligible to claim the credit in the month of January 2022 because it will definitely appear in GST or 2B of January 2022. Appearing in the January 2022. So therefore, you must be very careful for you to claim the credit. So therefore, this section puts a lot of restriction. One is it should be communicated to the registered person. Second is it should not be a restricted credit, sir. It should not be a restricted credit, sir. It should not be a restricted credit. The next very important amendments are Section 16 2C. Section 16 2C subject to the provision of section 41, section 43A is being removed. Sir, what is section 43A? 43A is nothing but GSTR 1, 2, 3 and rule 36(4). Provisional credit plus 20% plus 10%. All this thing is removed. Section 43A, as on today, it is not notified. It is not notified. So therefore, they have removed the section 43A. The reason is that they are omitting the form GSTR 1, 2, and 3. Now they are concentrating only on GSTR 3B and GSTR 1. GSTR 3B is a return. GSTR 3B is a return. So therefore, GSTR 1, GSTR 2, GSTR 3 is omitted. Therefore, section 43A is also being omitted. Section 43A is also being omitted. So that is an interesting amendment in section 16.2. We have discussed about section 16.4. Now comes to section 34, sir. Section 34, all you know that you can raise a credit note. You can raise a credit note. A registered person who supplied the goods, he can raise a credit note. But there is a time limit, sir. There is a time limit for you to raise a credit note, for you to issue the credit note, The time limit is the September of the subsequent year, the September month of the subsequent year. So therefore, for the year ended 31/3/2022, sir, you can issue the credit note only up September 2022. After that, you cannot issue the credit note. The supplier cannot reduce it. The recipient cannot reverse the credit. Only if the credit note issued prior to 30th September 2022 or on or before 30th September 22. So you can reduce, supplier can reduce and the recipient reverse the credit. Sir, now the time period is extended. Now the time period is extended up to 30th November, sir. Up to 30th November of the subsequent year. So therefore, now you can issue the credit note up to 30th November. So these are all will be helpful for us while finalizing the accounts. Even in our office, when we finalize accounts, so the assessee, in the month of September or October, the assessee says, sir, these are all the credit. I don't know whether I'm eligible, but I didn't take the credit. What I have to do? So therefore, it will be very difficult to take the credit because the time period is October 20th. So now the time period is November. Therefore, you can also immediately prepare the return and take the return and take the credit also. Therefore, at the time of finalization itself, we can find out whether the credit note is required to be issued, whether the dealer is eligible to claim the credit, whether he has missed any credit. If he missed any credit, he can take it up to 30th November. Sir, 30th November, sir, not October due date, not November due date. It is 30th November. Therefore, up to 30th November, even in respect of your return related to April 2021. April 2021 year end is 31st March 2022. From that November 22, that means up to 30th November 2022, even you can file your return April 2021 and you can claim the credit. So this is also a very welcoming amendment in section 34. Welcoming amendment in section 34. So now we will come to section 29(2), sir. Section 29(2) of the Cgst Act. Sir. What it says, section 29(2), sir? Sir, section 29(2) says in respect of cancellation or suspension of your registration. Very important. Sir, now it says, in respect of the composition dealer, earlier return for 3 consecutive period. Now it is being removed, sir. Now it is removed, sir. Now it says the return for a financial year, because the composition dealer, they are required to file a return annually, correct? Once annually they are required to file a return, annual due date plus 3 months. They have to file the annual return. Otherwise, the registration will be cancelled. So therefore, for composition dealer, you have to file your return within the due date, annual return within the due date, or at least 3 months, sir. Otherwise, the registration of a composition dealer will be cancelled. The next very important is in respect of a other person, other than the composition dealer, they said very clearly, they will prescribe. So therefore, we have to wait for the rules to prescribe. They may prescribe 3 months, 2 months, 1 month, etc. So which we have to wait and see. Now very important is section 37 of the section 37. So section 37, I already told you that GSTR 1, GSTR 2, GSTR 3 is omitted. Therefore, section 38 is omitted. Section 37 is also to the extent is omitted. Say, shall be communicated to the recipient of the said supply with such a time and such a manner as may be prescribed. It is being removed because there is no communication at all now. There is no communication. Earlier, I will file GSTR1, the person will verify, he will intimate, and then I will intimate. So these are all being is omitted. So therefore, section 37 now says subject to such condition and restriction. Subject to such condition and restriction. And further, the proviso is also is being is omitted because the proviso talks about GSTR1 and GSTR2 time. So therefore, that is also being is omitted. That is also being omitted. So therefore, section 37 talks about outward supply. For outward supply, they will prescribe certain condition and restriction. Now they prescribe. Now they prescribe certain condition. What is the condition? One, you have to file your GST or return of earlier month. Then only you can file for the current month. So therefore, subject to such a condition and restriction as may be prescribed. Subject to such a condition and restriction as may be prescribed. For you to file GSTR1, for you to file GSTR1, your earlier month is required to be filed. Sir, we took a stand saying that there is no provisions under the act. I have to file it sequentially. So therefore, this amendment is came to avoid those type of litigations. Therefore, we took a stand. We will file it April and then we will file it June because the June month supplier is asking. Then we will file it in September and then we will file it in December. So now it says the previous month GSTR1 is required to be filed. So that is an important amendment. That is an important amendment. Section 37(2) is totally removed. The reason is inward supply. Inward supply GSTR2 is being omitted. Therefore, section 38(2) is also being omitted. Thoroughly it is being omitted. Section 37(3), which have remained unmatched, 42-43, matching, unmatching, online reconciliation, communication, deletion, adding, all is being removed. So therefore, this matching is also being removed in section 37. This is also being removed in section 37. Sir, very, very important is any rectification, sir, any rectification, any error or omission. Earlier, you can file only up to September. Now the time period is increased to 30th November. Now the time period is increased to 30th November. Now the time period is increased to 30th November. 30th November, you can file your rectification omissions in respect of the detail is furnished. In respect of the detail is furnished. The next very important, sir, section 4. Next very important is, this is very important. See, 37. 37 now, a registered person, sir, shall not be allowed to furnish the detail of outward supply under subsection 1 for a tax period if the detail of outward supply of any of the previous period has not been filed. Sir, it talks about GSTR1, sir. Sir, GSTR1, as I already explained, that for you to file a GSTR1, you have to follow sequentially. If you have not filed the previous month GSTR1, then you cannot file the current year GSTR1. You cannot file the current year GSTR1. So this is a restriction in GSTR1. This is a restriction in GSTR1. Next important amendment in section 39 is in respect of a non-resident taxable person. In respect of a non-resident taxable person, earlier the due date is 20th. Now it is being reduced to 30th. Now it is being reduced to 30th for filing the outward supply and monthly return. So this is very important. So section 39(7) says now, 7 says that you have to file your return and pay the tax not later than the date on which he required to furnish such a return. So therefore, while filing the return, you have to pay the tax. Sir, it says there is one proviso. The proviso says very important. The proviso says very important. Sir, in respect of IFF furnish facility, invoice furnishing facilities, you can pay it 35 and balance, or you can also take self-assessed. So this section 39(7) talks about this only. The section 39(7) is talks about this only. Every registered person furnishing a return shall pay the government in such a form and such a manner as may be prescribed. For invoice furnishing facility, it is already being prescribed. It is already being prescribed how you have to file your return. So this is in respect of any omissions. The due date is extended to 30th day of November. 30th day of November. That is also a welcoming amendment. The next very important amendment is in section 3710 is a registered person, sir, a registered person shall not be allowed to furnish a return. That is, I am talking about GSTR 3B. He is not allowed to furnish a GSTR 3B for a tax period if the return for any of the tax period. So therefore, for filing a GSTR 3B of a current month, you have to complete the earlier month. You have to complete the earlier month. You have filed the earlier month return. And as well as the detail of outward supply for the tax period. So therefore, for January 2022, if I am going to file GSTR 3B of December 2022, I would have filed, and GSTR 1 of January 22 is also required to be filed. So that is in respect of restriction in filing GSTR 3B and restriction in filing GSTR 1, which we have discussed. Sir, section 41. Section 41 we have discussed in length. Section 41, you are required to reverse the credit. You are required to reverse the credit in respect of section 41. 42, sir. Section 42, 43 and 43A, sir. Section 42, 43, 43A is being omitted. The reason is matching, inward, outward, reconciliation, communication, delete, and communicate. All GSTR 1, 2, 3 is being omitted. Therefore, the corresponding section of 42, 43, and 43A is also being omitted. So therefore, there won't be any section 42, 43, and 40. 43 and 40. Now we will come to section 47, sir. 47 talks about a late fee, sir. In the late fee, section 52 is being included. What is section 52? Section 52 talks about the collection of a TCS by an e-commerce operator. They have to file the return before 10th of the succeeding month. If they have not filed the return before the 10th of the succeeding month, they are also liable for a late fee. That is section 52 is added. Please see here, section 52. And I removed inward supply. Why I removed? Because there is no inward supply at all. Therefore, there is no filing of inward supply. So therefore, section 38 is being removed and inward is also being removed. So therefore, there is no inward supply return. There is no section 38 return. So therefore, that is being removed. Now the department is very clear. The government is very clear. They are not going to implement GSTR 1, 2, 3. Even they are not able to implement GSTR 3B and GSTR 1. So therefore, they won't take risk. They won't implement GSTR 1 to 3. So therefore, they are slowly scrapping GSTR 1 to 3. They are omitting GSTR 1 to 3, and they are more concentrating on GSTR 3B and GSTR 2B and GSTR 2A also over a period of time. It will become redundant. Because now Rule 36(4) says very clearly. Rule 36(4) says very clearly. Auto-generated in GSTR 2B is a communication. Therefore, you can take a credit once if it is appearing GSTR. That is section 47 amendment. So now section 49. This is a very interesting amendment in section 49. Sir, now 49, what it says, sir? Sir, in respect of a person who are all a distinct person, according to section 25(3) and 25(4) of the Cgst Act. I am a dealer in Andhra and I have 2 GST number. There are 2 distinct persons, correct? And if I am having another one branch in another state, I have another one GST number. Sir, if there are a 3 or 4 GST number, and if there is a cash ledger, cash balance in one GSTN cash ledger, sir, you can transfer from one GSTN to another GSTN. You can transfer from one GSTN to another GSTN. Only one condition, sir. There should not be any liability. Before you transfer these balances. So therefore, now this is also welcoming, because in some branches there may be a cash balance, cash ledger. In another branches there won't be any cash balances. Then in such situations, you can transfer from one GSTN to another GSTN. That is section 49, sir. Now come to section 49(12), sir. Very interesting amendment. Section 49(12). Sir, before discuss section 49(2), I will discuss rule 86B, sir. What rule 86B says? Rule 86B says the dealer, he has to discharge his outward tax liability only to the extent of 99% of his outward tax liability. 1% he is required to pay by cash. even though he has a lot of accumulated credit. Sir, Rule 86B says that you can discharge only 99% of your outward tax liability. 1% you cannot take the credit, even though you have your accumulated credit, you cannot take the credit. What you have to do? You have to pay by electronic cash ledger. Electronic cash ledger. Sir, there is an exception in Rule 86B, sir. There is an exception in Rule 86B. First exception, if the dealer is claiming a refund, a zero-rated refund, more than 1 lakh rupees, this rule is not applicable. This rule is not applicable. And if the dealer is claiming an input tax credit, inverted duty structure refund, more than 1 lakh rupees, this rule is not applicable, sir. This rule is not applicable. The third very important is, if the specified person, say for example, in case of your proprietorship, if the proprietor paid more than 1 lakh rupees, sir, income tax for the last 2 financial years, then this rule is not applicable, sir. In case of a partnership firm, if the partnership firm paid more than 1 lakh rupees for the last 2 financial years, then this rule is not applicable, sir. If the partner, any 2 of the partner paid more than 1 lakh rupees for the last 2 financial years, then even then in this rule is not applicable. In case of a company, if the company paid more than 1 lakh rupees, this rule is income tax, more than 1 lakh rupees, this rule is not applicable. If the director or whole-time director, they made the payment more than 1 lakh rupees for the last 2 financial years, even then this rule is not applicable. And very, very important is, if your accumulated credit from April to November, and if it is more than 1 lakh, 1%, more than 1%, cumulatively, then this rule is not applicable. So therefore, Rule 86B first says, I am liable to pay 1% on outward taxable supply, even though I have a accumulated credit. But there are certain exceptions. If you come into that exception, then Rule 86B is not applicable. Now you come to section 12. This section 12 of 49 and 12 of this bill, section 49 and 12. It says, notwithstanding anything contained, the government may, on the recommendations of the council, subject to such a condition and restriction, and specify such maximum proportionate of output tax liability. Sir, the rule is there from 2612, from 1/1/2021, if my remembrance is right. So the rule is there from 86B. Therefore, we took a stand saying that this rule is not backed by proper section. There is no section. There is a delegated legislation through rule. Therefore, Rule 86B is not applicable. The rule is 86B is unconstitutional. There are a lot of writ petitions filed for the various high courts. Now the amendment says that. Through section 49 and 12, see, to specify such a maximum proportion of output tax credit, now Rule 86B is backed by section 49 and 12. Backed by section 49 and 12. So until then, you can find, after this is being amended, then Rule 86B is backed by section 12. Sir. Section 12. That is very important. Amendment in section 49 and 12. Sir. Sir, 53 I discussed earlier, sir. Section 53 I discussed earlier. Rate of interest also I discussed. Now, if you come to 52.6, sir, 52.6 is talks about the electronic commerce operator. The electronic commerce operator also, while filing an outward supply, if they make any omissions or rectification, then they can file it up to 30th November. Sir, wherever 30th September, almost they have changed to 30th November. Almost they have changed to 30th November. This is very important, sir. Amendment, sir. Section 54. Section 54 talks about the refund, sir. Sir, I have time up to what time, sir? I am speaking. I am continuing. Another
you can continue, sir. No restrictions, sir.
So another 5 minutes I will finish it.
Yeah.
So amendment in section 54. If refund, sir, refund claim. Amendment in section 54, sir. In amendment in section 54, now very important is they are going to prescribe form for electronic cash credit refund. Sir, I have a credit in my electronic cash ledger. I paid it wrongly. Now I wanted to claim. Earlier it says you claim the return and furnish under section 39. Now that 39 is removed. So therefore, now through this amendment, they are going to prescribe the form. They are going to prescribe a form, such a form and manner as may be prescribed, that they are going to prescribe. And then, sir, in respect of a specialized agencies, which is not applicable practically for all of us, United Organization or any multilateral financial institution, the time period for filing a refund from 6 months to 2 years is being extended. 2 years is being extended. Next, very important, sir. Next, very important. So now the officer has a power to withhold your refund, in respect of the tax, interest, or penalty as the case may be. So therefore, he can also deduct whatever the tax and interest which are all required to be paid by you. Balance only the officer will give you the refund. So therefore, now this section gives a power to the officer to withhold the refund and to deduct from the refund, whatever the amount is outstanding. This is very important amendment, sir, in respect of Cgst supplies. Cgst supply. Sir, Cgst supply, if you go through section 54 and if you go through particularly the relevant date, the date is not being properly mentioned. So therefore, now it says that for you to claim any supply to Cgst, if you are claiming the refund, for you the 2-year time period is applicable from the date of filing your return. So now it is being specifically stated. Earlier there was lot of issues, says that from the payment of tax, whereas I didn't make any payment for Cgst supply. So therefore, there are a lot of confusion. There are certain cases also is filed. Now it says very clearly from the date of filing the return. So now the goods and service tax practitioners, section 38 is removed because you are not required to file a return under section 38. So therefore, that is removed. And then very important is section 168. There also section 38(2) power is also being removed because section 38 itself is being removed. Then where is the power to extend the date? So that is in respect of section 38(2). I think with this I almost covered all important amendment in Finance Bill 2022, particularly related to the indirect tax proposals. I am once again thankful to Mr. K. Rajendra Prasad sir, Chairman sir, for giving me an excellent opportunity to share my views, thoughts on the Finance Bill 2022 in respect of the indirect tax proposal. Thank you, sir. Thank you for all of your passion. Thank you.
Thank you, Subramanian sir. It's a very excellent presentation. You have covered all the provisions in a very elaborate manner and in-depth presentation. You have brushed up the old law as well as the new law in one single seminar. So as seen from the presentation, some of the provisions are very good for the filing persons, GST persons, like increase of the time limit from September to November, either taking the input or issuing credit notes. And another one is interest. So you have to pay interest only when it is utilized. It's very clear. Some of the provisions are very tough provisions, like they are giving more emphasis on the compliance, and they have removed the GST 123 concept from the Act. Thank you, sir, for your excellent presentation. Now over to moderator.
Thank you, sir. Sir, can you stop the sharing of the screen, sir?
Sure.
Thank you, sir. Now I request Ongole Branch Chairman Sri N.B. Chaitanya Reddy to propose vote of thanks.
Secretary above.
Sir, good evening, sir.
Good evening.
So, am I audible, sir?
Hello?
Sir, am I audible?
Yeah. Audible,
Sir,
audible.
yeah. Good evening, one and all. I'm Chaitanya Reddy, Chartered Accountant, Secretary of Ongole Branch, sir. So, on behalf of Ongole Branch of SIRC of ICI, first of all, I would like to thank my Chairman, sir, and MC for selecting such a relevant topic of budget amendments covering both the direct taxes and indirect taxes. And special thanks for arranging such a eminent speakers like Gopala Krishna Raju garu and Subramaniyan garu in both direct and indirect taxes. Sir, coming to Gopala Krishna Raju sir's presentation, that was a lucid presentation, sir, covering all issues. I think there are many amendments in direct taxes and indirect taxes. Both Raju sir and Subramaniam sir both have taken the presentation in a very attractive manner, covering almost all the major amendments in the budget. So I think most of the members, almost all my members, would take benefit from this presentation, sir. So a special thanks to Gopal Krishna Raju sir and special thanks to Subramaniam sir for such a great presentation, sir. Thank you to all the Ongole branch members for making and for participating in big number. In fact, our participation has touched almost 100. In fact, I could not join for the first 15 minutes because of space constraint. So special thanks to all the members who has made this presentation and made this seminar a grand success. Thank you once again. Thank you one and all. Over to you, sir.
Thank you, Chaitanya. Now I request Sri Baisan Jagamohan Rao Garu, Treasurer of the Ongole branch, for the national anthem.
जनगण मन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंधु गुजरात मराठा द्राविड उत्कल वंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तव सुगे गाहे जनगण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे जय हिंद.
Thank you, member. Subramanian sir, one small query is there. Only one query from the members. How the GSTR2B will recognize about suppliers' defaults?
Yeah.
What will happen if system shows ineligible ITC wrongly? Can we rectify it manually?
Sir, the first question is GSTR2B, you know, they are going to have the system. So therefore, if it is a new registered person, the GSTR2B itself will automatically pick up. So that is the technology they are expecting. Therefore, you have to wait and see how it is going to be generated. But the Act says very clearly, the Act says that GSTR2B will show you both the eligible and the ineligible credit. So therefore, there will be some mechanism to find out. Even today, we are receiving a notice if the return is filed after September 30th or October 20th. We are receiving a notice saying that you are not eligible to claim the credit. This is system only generating this credit. So like that, it is possible for the system to generate eligible and ineligible credit. So therefore, that is possible, but you have to wait and see. You have to wait and see. The next question, sir. This is one question. Next.
Only one question is there.
Only one question. How the GSTR will be recognized about the supplier default and what will happen if the system shows ineligible ITC wrongly? Yes. Sir, if the system itself, GSTR2B itself shows wrongly, it is a eligible credit, but system shows it wrongly, then in such a situation, the 2B is a editable form. So be happy with that. The GSTR2B is a editable form. I told you one example. The supplier filed the return in the month of September 2021. I received the goods only in the month of January 2022. Therefore, I have to take the credit only in the month of January 2022 because I received the goods only in January 2022. The section 16 is not being fulfilled. Therefore, I am taking a credit in January 2022.